Capital gains tax is a tax that was introduced in our law in October 2001. This is a tax which is paid on the increased value of a capital asset when it is sold. Now today we're specifically looking at the capital gains tax that is payable when you sell residential real estate. And to shed some light on the matter, I'm now joined by conveyancing attorney Marius van Rensburg. Marius, welcome to All About Property.
Thank you, Cornelius.
Now, I gave a bit of intro there of what it is, but please break it down for us. What is capital gains tax and who pays this tax?
Right, so, capital gains tax is a new tax that was introduced into our law in October 2001. So, if you owned an asset pre-2001 and you bought the asset for $1 million, you sold for $2 million, you made a $1 million gain, there was no tax. Post-October 2001, if you buy an asset for $1 million...
So you're saying asset, we're specifically talking about residential property today, hey?
It applies to all asset shares.
Okay.
But today our discussion is residential property.
Okay.
So if you buy a residential property for $1 million, you sell for $2 million, the increased value on that property is what's known as your capital gain. And as a seller, you are liable for capital gains tax on that increased value of the property. So it's become a very significant part of our tax landscape.
Now, how is capital gains tax calculated? How do you know when you sell your property how much of that money must go to the taxman?
Well, first of all, I think it's important to get some advice to calculate it so you know what you're in for. But if I can try and explain it simply, capital gains tax is what's called an add-on tax. So what we do is we take a portion of your capital gain and we add it on to your ordinary income.
So your capital gain is the profit that you made on that property?
Yes, and,
okay.
and we can talk about the details how we calculate it. So there's something called an inclusion rate, and I'll give you the simple and then I'll give you the complicated and then the simple version. As an individual, you have an inclusion rate of 40%. So if you have a capital gain of 1 million rand, your inclusion rate is 40%. We take 40% of the million rand, which is 400,000 rand, and we add it on to your ordinary tax. You are then taxed at your marginal rate of whatever your marginal rate is, the maximum, which is 45%. If you are selling your residential property and you're in a PTY Limited, a CC or a trust, your inclusion rate is 80%. So you take, if you sell a property and you have a R1 million gain, 800,000 is taken onto the company's ordinary tax. In the case of a company, the company tax rate is 28%. In the case of a trust, the trust rate is 45%. And this is how we come to what I call the rule of thumb rate. So the rule of thumb rate, subject to the exemptions and exclusions, is 18% for an individual. The rule of thumb rate for a PTY or a CC is 22.4%, and the rule of thumb rate for a trust is 36%. So a trust, if you sell a trust and you make R1 million, you're in for 360,000 rand of capital gains tax.
Okay, great. Now Marius, there are certain deductions when it comes to this capital gains tax. What are these, and who is eligible for these capital gains tax deductions?
So if I can answer your question in two parts, the one is that we must determine your base cost. So if you bought the property after October 2001, your initial, what I call your initial base cost, is the value at which you bought that property. So if you bought a property in 2005 for R1 million, your base cost is R1 million. If you bought your property before 2001, we must now determine the value of that property at October 2001, because that's when capital gains tax was introduced.
Okay.
There's three ways. There's the valuation method, which you had to submit a valuation by September 2004. There's the time apportionment method, and there's the 20% of proceeds method. If you bought your property prior to 2001, those all have different parameters, and you must go to your accountant to get him to calculate which is most advantageous to you. So now you have a value at 2001 and afterwards. So, and to give you an example, you bought for R1 million, you're selling for R2 million. You're entitled to deduct, as in broad strokes, the cost of acquiring the property. So your transfer duties, your transfer fees, and even your bond costs when you bought the property, you're entitled to deduct the cost of selling the property, agent's commission,
Okay.
Cost of advertising, those kind of expenses, and you're entitled to deduct the cost of improving the property. And when I talk about improving the property, I'm not talking about maintenance. If you repaint the house, if you fix a window, that's maintenance costs. If you renovated the kitchen, if you added on a pool, if you put in a sprinkler system, you put in a new alarm system, you've improved the value of the property, and by doing that, you can add that onto the base cost. So to use my example, R1,000,000 purchase price, 100,000 to acquire, 100,000 to sell, 100,000 improvements, 1.3 million rand. Now your base cost is 1.3 million rand. Your outgoing selling price is 2 million. Your gain is 700, and that's the amount on which you're going to pay capital gains tax.
Now,
those are your basic deductions.
Now, I would imagine that in order to qualify for these deductions, you must have proof of all these costs in case there's an audit.
Yeah, I mean, absolutely, and it's in the tax system. You know, now you file on e-filing. So you don't give your documents up front, but if you audited or SARS ask for it, you may have those documents. So what I really suggest to property owners, when you buy the property, take a file, a lever arch file, or if you're technically proficient, get a computer system to do it. Keep all the documentation. Keep every single scrap of documentation. And think about it this way. For every 100 rand you spend, if you have documentation, you can save 18 rand. For every 1,000 rand you spend, if you have documentation, you're saving 18,000. And for every million, you're saving 180. So it's absolutely worth keeping the documents. It's particularly important if you're going to buy a vacant piece of land and build the top structure.
Okay.
Now keep the contract, keep the proof of payments. Try not to pay your contractors cash because you want the invoices.
Yes.
But keep a file so when you sell the property, you can accurately work out what your base cost is utilizing that file.
Now, Marius, there are individuals who are also exempt from paying capital gains tax. Talk to us about this.
So look, I'm going to give you three quick categories. The first is when you die. Death is what's called a capital gains tax event, and when you die, you're deemed to pay capital gains tax on all your assets, including your residential property. There's a 300,000 rand exemption when you die, which is I suppose unhappy since you're dead. Each year, each individual person gets 40,000 rand. So if you make R1 million gain, you can deduct 40,000 rand off the million to make it 960. Okay, those are the simple ones.
Okay.
Then the big one is what's called the primary residence rebate or exclusion. If the property is your primary residence, the first 2 million rand of gain is exempt from capital gains tax. But to qualify for the primary residence rebate, you need to have two criteria. One is the property must be registered in your own name. It can't be in a PTY, CC or a trust. Okay? And two, it must be your primary residence. So it can't be a secondary home, it can't be a holiday house, it can't be an investment property. It must be the place where you go at night to rest your head as such.
Okay.
If you qualify under those two criteria, the first 2 million again is exempt. So for example, you buy for 2 million.
Okay.
So for example, if you buy for 1 million, you sell for 3 million, you pay no capital gains tax. If you buy for 1 million, you sell for 4 million, you got 3 million again. The first 2 million is exempt, and the last million, you pay capital gains tax on the ordinary basis, and we can apply a rule of thumb rate of 18% to 180,000 rand.
Well, Marius, thank you so much for breaking this down to us. Complicated topic, and you really made it very easy, so thanks for that.
Absolute pleasure. Thanks for having me.